there, sexy people. It's Mark Yegge. Welcome to another weekly stock market update. I'm really happy you're here. The market seems to be turning a little. That's what the theme of this is. Although it doesn't feel that bad. We're still in an uptrend. We're still in a green market, but it seems to be turning a little. So let's get to it so we can talk about this market and the fun we're having. I hope you're having fun in it. Geez, it's been a long melt up here since like 4 months ago. It's crazy. All right, we are in a green market, but it is 3 greens and a red. So that means we got a little bit of turnaround coming around here. You know, when it goes to 2 greens and 2 reds, that means we're in a yellow market, which means exercise caution. This is kind of take your foot off the accelerator, but don't hit the brakes yet time, right? So it's like, if you've made some money, now there's a time to start putting some of that money away, pocketing some profits, getting better positioned because, fall always follows summer. And we might be in that season. So market's still green. And you can look, here's the NASDAQ hitting an all-time high this week, but, or at the end of last week and reversing. And it hasn't been able to make that up this week. So a little bit of trouble on the NASDAQ, but still, that's an upward trending chart. And upward trending charts even have fluctuations and they go down sometimes, even with other upward trending. Same thing with S&P 500, upward trending chart. Again, not quite holding that all-time high, but pretty close. It looks pretty good. It's a nice check mark from lower left to upper right. We like that. Same thing with the Dow, although the Dow has not been able to make new highs for several weeks now. But, the other two are. That's good. And then here's the New York Stock Exchange, probably the strongest one. It was the weakest one a few months ago, and now it's roaring back, whatever it is. And there it is, just coming off the high from a couple days ago. So not the worst news in the world, but gosh, you start to get this feeling that because of the stupid inflation report, that the Fed or the government has to print money because the taxes don't cover what we're spending anymore. That they got to spend money. That's accretive to assets and bullish for assets. So you think stocks are going to go up, and that's why the stocks have, but maybe everybody's looking to take a breather. So anyway, you should take just a little breather. I'm not saying go short the market. I'm saying just be a little careful right here. The volatility index, the VIX, has gone up to the mean. That's what it does. It reverts to the mean. It is right at the 200-day moving average. Very slowly, but it's reverted to the mean. Now, could it go the other way? Who knows? We'll see. Apple has been on a downtrend. This is, if you just wanted to describe a lousy chart, kind of a stinky poopy head chart, as my nephew would have called it when he was 3, this is that, right? It's just couple of gap downs and not able to recover, and it's below the 50-day moving average, and it's got a death cross where the red line goes down through the black line, the 50 goes down through the 200. There's not a lot of good stuff, and you go, wow, what's going on with Apple? Like, how can Apple go down? Well, they all could go down, even though they're really good. There are times when people need to rotate to cash and fix up their portfolios, and they get a little bad news going, or maybe Kramer likes it and it goes the other way. Whatever it is, there's a sell-off going on, and this stock is sold off from basically $200 all the way down to $170. Not the end of the world, but that chart just looks stinky poopy head is what I'll say. MongoDB, it looks like it's giving up a little bit as well, and that has turned decidedly down, and that puts it in a downtrend into the 200-day moving average. So if bad things happen below the 200-day moving average, so it needs to recover that pretty quick. And it's still in an uptrend technically, but yeah, I don't know. This one's not as strong. Tesla is also a weak chart. And, it's funny because companies can do great and the stocks can do something totally different. So there's a seller out there in Tesla. Who knows? It could be Elon Musk himself. I know everybody's against him because he bought Twitter and changed it into X, and he's letting, Putin give his spiel on there. And he has really, I guess, made people mad. And so, if you make the government mad, they can print infinite money to short sell your stock. I'm not saying that's what's happening. I'm saying there's a seller there somewhere. And when will the selling stop? Well, we've seen this happen before with Tesla. When the selling stops, the buying starts. So we got to get rid of all those sellers. And then I've seen Tesla have some rip your face off rallies. I went to the last one where the stock went down to $100, and it went to $200 in 6 weeks. It doubled in 6 weeks. So Tesla can move very, very quickly. Let's hope that same thing happens again. And then JP Morgan Chase, I'm not going to do too many more of these, but the bank sector seems to be good because if the Fed or the Treasury starts to print money, and they already are, by the way, they're just not telling us they are, They're buying treasuries, and they're using fake money to do it. And that, because we have a deficit going on. We're what, 34 trillion. And by the way, it's going up $1 trillion every 100 to 110 days. That's an accelerated pace of irresponsibility. And nobody's talking about cutting back the budget. Nobody. And that's why we're getting inflation, right? We have to print more money. It's a direct correlation between how much money we print and how much inflation there is. Period. End of story. It ain't 2%. It ain't 3%. You know it. I know it. The American people know it. It's like 20%, 15 to 20%. And I don't care what they tell you. I know I just have to look at my eggs for the last 3 years, and I can tell you what inflation is. All right. I'll do one more. NVIDIA. This was one of my stocks that I called at the beginning of the year. It's funny because I was watching my SMCI video this morning, and it was really, I said, this is going to coil around here about 357. Here's where I think it's going to go. And, every once in a while you get one right. But SMCI and NVIDIA are two that did what I thought they would do. And that's the beauty of some of this breakout trading that we do, and finding the right stock in the right spot on the chart where you can buy it before the breakout happens or as the breakout is happening. NVIDIA is one of those. It went up to almost $1,000 5 days ago, had a reversal, and it hasn't made back that reversal. But to me, NVIDIA, unless we have a big market correction, looks pretty strong here. It's like it's making a little platform base. And so that's kind of exciting. So listen, that's it for me. I hope you have a fantastic weekend. Thanks for joining me. By the way, we have an investor newsletter that we're just putting out now, and it's going to include things like this video. It will also include, it's free, by the way, right now. And it will also include things like, my stock of the week or stock of the month, lists of industry, the top 10 stocks in the industry, the worst 10 stocks by industry. All kinds of different things. And you get them all in one newsletter, and you can click on them and watch them just like that. If you want to subscribe to that, just go to cashflowmachine.io/tips, because it's called Insider Tips. Just put /tips, put your name in there and email, and we'll start sending it out to you. Also, if you're watching this on YouTube, Rumble, wherever you're watching this, please give me a like, a subscribe, make a comment. I'm happy to have a conversation with you. I'm now starting to know some people in my comments, so that's kind of fun. But that all helps the algorithm deliver this to you on a timely basis. If you put your notification bell on, it'll pop up on your phone or whatever, and maybe you can catch this, on Friday and maybe do something with it, or at least on the weekend. Anyway, enough for me. Thanks for being here, and I will see you hopefully next week on the next weekly stock market update. Take care. Bye.